Hello and welcome to this special conversation. West Asia crisis hits home. I'm Ankur Mishra, and over the next half an hour, we'll discuss the economic questions that matter most in the current global environment. As the crude oil price remain volatile, the rupee comes under pressure, global bond yields surge, markets witness heightened volatility, and inflation concerns rise once again. The economic consequences of West Asia conflict are now beginning to hit home for India. At the center of this debate lies a crucial question. Should India defend growth? Should India defend the rupee or defend macro stability first? Joining us tonight is one of the India's respected economists, chairman of 16th Finance Commission and former vice chairman of Niti Aayog, Professor Arvind Panagariya. Professor Panagariya has sparked a major macro debate after his remarks that 100 is just a number while talking about rupee and RBI intervention strategy. Professor Panagariya, always a pleasure to speak to you. But before we come to your comments on rupee levels, Reserve Bank of India has actually announced a record surplus transfer of nearly 2.87 lakh crore to government. How significant do you think is from a macroeconomic standpoint?
Look, this has been large for the last several years now. And to me, that's a routine matter. The RBI really has a very large balance sheet. It makes a lot of earnings on the bonds. Generally, these are mostly government securities, which it holds. And it is the return on those securities, which then at the end of the year, the RBI transfers to the government of India. So it's a part of the revenues that the government of India expects. I don't think there is anything terribly unusual about it. There was a time when there was some differences between the RBI and the government of India, and that made big news. But that was in the past, and for last several years, there has been general understanding between the two arms of the government. And so I really see that as a basically routine matter.
Considering current scenario, do you think this gives the government meaningful fiscal room at a time of global uncertainty?
Well, the government needs all the revenues it can get. So from that perspective, this is a fairly substantial amount transferred to the government of India. And particularly, if the current situation in West Asia continues for a while, then the government is going to be needing those revenues. So whether or not meaningful, this is a fairly substantial sum, incidentally, even as a proportion of total government expenditure, it is a pretty good size transfer. So all in all, that seems, we'll know at the end of the year, when the fiscal deficit numbers come out for 26, 27, as to whether this was adequate or not. But given the past history, I think, this is a fairly good sum, and certainly not out of line with the recent years transfers by the RBI to the government of India.
Definitely, and the market expectation was there somewhere between rupees 2.8 lakh crore to almost even some of the economists were suggesting 3.5 lakh crore. And therefore, now that the amount has been decided, should the government use this fiscal space for capex, fiscal consolidation, or consumption support?
Well, I think this will be used at all margins. The government has multiple priorities. And so certainly, in some ways, it doesn't matter which part of the revenue gets used for what. That's not the really issue. Ultimately, these revenues, whatever the RBI transfers becomes part of the overall revenues of the government of India. And then based on the revenues, not even based on the revenues, but government has expenditure priorities. And it is priorities on how far it is going to let the fiscal deficit go. Based on those two considerations, it's going to decide. And obviously, the government has capex is a very high priority, but so also the consumption, and so also the safety nets for the poor. So if there is, if the and this time because of the West Asia crisis and for the consequent rise in the fertilizer prices, the subsidy element in fertilizer is certainly going to rise quite dramatically. So some of the revenues will also go to finance that part of the extra subsidy that the government has to give. And if the government also needs sees the need for further extra temporary transfers because, say, for example, the petrol prices rise, if that's sort of or inflation rises quite a bit, then for all of that, if the government needs to compensate the poor a bit for one particular year, it might use those revenues for that.
One of the talking points even in this surplus transfer has been the contingent risk buffer kept at 6.5%. Last year it was 7.5%. In your opinion, you think central bank has struck the right balance between prudence and surplus transfer? Because of course there is a benefit of keeping it at 6.5%.
Well, look, in the end, credibility of the Reserve Bank of India is as much from the credibility of the government of India as it is from its own buffers. So I don't see a whole lot of conflict here between where that surplus sits. I think more important issue really is that the government really does not let the fisc get out of hand. I mean, in the end, the two major kind of policies that matter are the monetary policy and fiscal policy. And as far as the credibility of the Reserve Bank of India is concerned, as long as the government of India is credible and solvent, the RBI will always remain solvent. This particular ratio really is not something that I pay a whole lot of attention to, frankly speaking.
Now coming to the big talking point, you have recently posted on X about 100 being just a number while talking about rupee. Are you effectively suggesting that the central bank should stop defending psychological currency levels?
If it is, yes. I mean, you see, you just watching the central bank's actions, one sees some hesitation, and I felt that hesitation may be coming from the figure of 100. Everybody does talk about that number 100, so it is a psychological number. So it can happen that, after 96, 97, the central bank really goes out of its way to defend the exchange rate. And what I am hinting at is that, look, at the end of the day, there will be a time when that 100 number will be breached. And there is no reason to make that kind of, that particular number the fulcrum of the policy of defending the rupee against depreciation. So that was all I was saying, that, don't let that be the reason. Let's stay with what is good from the country's viewpoint, and that is where the rest of the advice that I penned down in that post on X followed.
Definitely, but even if you go by the numbers, particularly this year, aftermath of West Asia crisis, we are the worst performing Asian currency currently. So, if not levels, what should Reserve Bank of India watch before intervention?
No, what I'm saying is that look, some of this hype about worst performing currency is a bit of a hype. The crisis has brought under pressure other currencies as well. Even though we kind of are used to thinking of measuring the the value of the currency in terms of the dollar itself is under pressure too. So in fact, in the last year or two, euro has appreciated against the dollar as well. So what we had in the last year or two is some outflows of the foreign investment. Largely, you see, there were, if you look at the FDI itself, the headline number on gross FDI that we usually follow, if you look at that number, that has been performing extremely well. And it was at the all-time high of $81 billion in the last year, 24-25. And currently, if you look at the first quarter of 25-26, it's running close to about the annualized figure equivalent of about $100 billion. So the FDI, gross FDI is actually remaining robust, which is to me the real measure of the productivity of the Indian economy. How do the foreign investors assess the returns on long-term investment in India? That is the right number that signals that is the gross FDI, which has done robustly well. Now, where people have now gone into, because there is always a tendency to look at the negative first. And so as a result, what has happened in the last year particularly, but also about 2 years, but especially 24-25, is that a lot of the past investments that had come into India came to fruition and IPOs happened. And so they sought the exit and that money has exited. So instead of, the 28, 29 billion that used to go in the earlier years, last year, about 51 billion went out. But year before that also, in 23-24, about 44 billion had gone out. This is the repatriation of the past investments into India. And that is what has actually, created this whole business about the net foreign investment having gone down significantly and all, because this is an outflow. And so the net inflow into India has become much smaller. But in addition, then the Indians themselves invest abroad. And this particular year, 24-25, Indians also ended up investing more than usual. So that is where this part of the pressure has come on the rupee. And the RBI has been 100% right in letting the rupee depreciate some. And when this money could flow out only because it had flowed into the country before. So that is what what determines, the countries that never received any FDI in the past don't have any money that will flow out. And therefore, they may not come under that kind of attack, but that's simply because there was not any past investment to go out. So that is what we have to look at. And in the ultimate, we have to look at how the economy is performing, which it has done extremely well. The average growth in the last 3 years, for which we have the numbers, has been 7.3%. Which economy in the world is performing at that level? And inflation, by the way, with such robust growth, has been roughly around 3%, maybe between 3 and 4. And so inflation-wise also, the economy has been very stable. So this whole business, in the social media noise, we miss out the bigger things.
Definitely, you're making a very valid point. If you just talk on numbers, we have been performing very well. And just the numbers suggest that inflation is still not, over the levels which Reserve Bank of India is watching. In fact, it has been in anticipated lines. Even the core inflation is under control as far as the latest RBI bulletin is concerned. But having said that, even Reserve Bank of India's stated position is that they do not watch any kind of levels. But excessive volatility is something which they keep an eye, and of course they intervene in the market. Therefore, now considering the current scenario which is happening globally, how much of the options you think Reserve Bank of India has or you think the ammunition will be used at the right time?
Right. So this is where I said that, look, if it is a short-term issue, say 3 months to a year, I mean, 3 months we expect, because even if the war were to end today, it'll take at least 3 months for oil supplies to normalize. And it can be longer. So if it's 3 months to a year, then what will happen is that rupee will depreciate today, but it will recover tomorrow. When the oil import bill declines, that will be one factor. But the other factor will be that then, because if rupee has depreciated in the interim, then rupee becomes much cheaper in terms of the dollar. And so the dollar finds anything in the rupees to be very attractive. So the foreign investment will come back in. The foreign capital in general will come back in. And when that foreign capital comes back in, then we know that that is going to push the rupee back up. And so the depreciation will be basically partially or substantially neutralized. So that's a short-run scenario. If it is a long-run issue, then the war might continue for the next, let's say, 3 to 5 years, something of that order. Then I don't think RBI in any case has a choice. Because
Definitely.
then this is a long-term issue, and therefore the long-term equilibrium exchange rate, dollar-rupee exchange rate, is going to be well beyond 100 rupees to a dollar anyway. And
Definitely.
so no point fighting it, because ultimately your reserves are also limited, 700 billion only. If you're looking at 3 to 5 year scenario, then you'll run out of even those reserves.
Definitely, you're making a valid point. But overall, since you have seen many crises, and comparatively, how serious is current external shock compared to episodes like 2013 taper tantrum?
2013 taper tantrum was a much smaller episode, and you also knew the end of it and all. And so from compared to that, this is, also the uncertainty actually with the current one is much greater, because we just don't know what the fate of this war would be. I mean, personally, my kind of view is that it shouldn't last very long, because the public sentiment within the United States is very much against it. Even the Senate has already voted against, on some kind of war restrictions. It has to be voted in the House also. But even in the House, actually, the votes are in favor of the Congress putting restrictions on the president, on the executive, as far as this war is concerned. That wouldn't happen, actually. They went for the break, and they'll come back. We'll see. But so the sentiment is very strong in the United States against the war, or against, for the United States to now, call it off. So in this sense, I sort of remain optimistic, but still you cannot predict it until some sort of, because, on the other hand, you also see that the red lines that President Trump has drawn, where he says that we have to recover the entire enriched uranium. Iran has to give it up completely, and Iran's kind of supreme leader having said that, well, this uranium is not going out of Iran. There is an impasse there. So one can't predict exactly what will happen in the war, whether the war will be called off or whether it might.
Definitely,
prolong.
it is very, very difficult to predict, and especially Mr. Trump. But considering the current scenario, what would you worry more today? Disorderly depreciation or excessive reserve depletion?
Oh, most certainly, I think, excessive reserve depletion is a more worrisome prospect, because, exchange rate is easier to reverse when the times change. But in any case, more importantly, letting rupee depreciate is an adjustment that the economy needs currently. I think it's not whether you're worried about this or that. But what you have to look at is that from the economy's viewpoint, meaning sustaining growth, sustaining employment, sustaining orderly rise in prices, what is the right prescription? And there I see that, if this pressure on the rupee remains, there are some sort of reports which say that, look, even the exporters are not bringing their foreign exchange earnings back into rupees, and there is some sort of hedging going on and so forth. So, which is keeping the pressure on the rupee up as a result. So, allowing the rupee to depreciate will actually then bring that money back into the banking system as well. The exporters will then realize that, okay, whatever depreciation they were expecting has happened, and now it's time to bring their rupees back. Their dollars back.
Right. So, we have spoken on rupee part. Now, I also want to understand your comment on crude particularly, because that has been volatile. In fact, that has been a cause of worry as well. And so what crude oil price level becomes dangerous for India's growth inflation balance?
Look, it's not like you and I have the choice on that. If we had the choice, we'll want it the lowest possible. So that's, in some sense, that's sort of not the right question to ask, really. That what the right question to ask is, how do we respond to the crude price increases? And I have said this before in some of the other interviews, that we will need to let the domestic petrol prices adjust. Because in the end, if crude prices continue to rise, it is reflective of the shortage in the market. And therefore, the availability of crude itself is dependent on, that price reflects the availability of crude. And which means that we will have less availability of crude, and there will have to be a way to ration. And to me, the price is the best rationing device, because price works on all margins. So therefore you let the price of petrol and other crude oil-based sources of energy rise in prices. Even electricity may have to see some rise in price. So, but petrol is the first one, evidently. So allow that to happen. Some of the electricity, of course, is coal-based. So on that, we got plenty of results. So that's the short-run response we'll need to confront. In the longer run, I think we need to look back at our energy consumption and the sources of energy. I think we have not made as effective use of coal as we could, because coal supplies we got domestically, practically, infinite of it. And somehow the coal sector has to perform a lot better than it is doing. The coal-based electricity is certainly a very feasible option for India. And that is what we need to begin thinking. And solar, of course, that also we are doing well, except that, some of the problems relate to the storability of solar electricity, and also the transmission issues from places like Rajasthan to the rest of other parts of India. So those are the areas on which we need to work. Cooking also, for example, we have relied too much on LPG. We ought to start shifting to cooking on electricity. In the United States, we have both gas and electricity available, and we, at least at our home, have always, for the last 40, 50 years, opted for electricity in electric cooking ranges. So, these are shifts we can actually make. And even actually on vehicles, for example, we have insisted that electric vehicles only domestically produced, because we keep this extra high 100% plus tariff on imported electric EVs. I think as a policy that needs a second look. That look, ultimately objective really is the consumption of electric vehicles. Don't connect it to the production, because if our guys can't produce these electric vehicles at an affordable price, allow the imports to come in so that you switch to electric vehicles and we can produce our own electricity using both solar
Definitely.
and coal.
Definitely, and Prime Minister Narendra Modi has already appealed for the same. And considering where we are, and that is one question would everybody would want to know is, can India still realistically sustain 6 to 7% plus growth? Even if in the current scenario where crude is uncertain, where the West Asia crisis, we do not know how it will pan out, but our Prime Minister talks about opportunity in crisis. So you think there is still opportunity for 6 to 7% growth?
I'm confident that we'll not fall below 6%. Now, that is a decline, obviously, because the average of last 3 years has been 7.3%. But I don't expect our growth to go below 6%. We will see. I've generally been very right in my optimistic projections of the growth rate in the past, and I've often kind of teased nearly all forecasters that each year, as the year comes towards an end, they are all trying to revise upward their forecasts because their original forecasts often tend to be too low. I always maintain that our ability to sustain 7% growth is very much there. We can push it to 8 to 9%, but for that requires a bit more work. But even in this crisis, I expect we will have 6% growth for sure.
Right. Thank you so much, Mr. Panagariya, for joining with your views. And it's always a pleasure to connect with you. And particularly at this time, your views are very, very, very important for many of the stakeholders who are watching, because everybody talks about the crisis, but opportunity is something which India needs to spot and harp on it. Thank you so much for taking out time.
Absolutely. My pleasure. Thank you.